In this episode, I'm going to be showing how to trade Forex. So, firstly, I'm going to start by changing my pointer to this. So, in order to trade Forex, you need to use TradingView. That's what I use. That's what I prefer. I have TradingView on my laptop and I have TradingView on my cell phone. So, how I do it is I first open up the weekly time frame. Sometimes I also do it on the monthly, but you don't really need to. You can just open up the weekly time frame, change your your settings. This is not settings, but change from the candlestick to the line chart. Okay, so this one is a little bit noisy. If you wanna clean it up and not have a lot of this, you just go to the monthly. Okay, so once you reach to the monthly, what you do is you look for areas that shows a turn back moment on the line chart. Okay, so if you see it going up and then it turns back here, you see changing direction to the down. That is officially a resistance. You see, that's officially a resistance. So the more the line chart turns back at that point, the more of a resistance it is, the more confident you are that the chart, once the chart comes back to that point, it can actually turn back. You see, it turned back here, it was going up, it did a small pullback. You can also call that as a reversal because you see it touch here, and touch here. You see? So we can treat that as an important zone. See, it's just where it turned back. It's nothing major. It's just where it turned back. So this is just a line. You can make it whatever color you want. I often just make it gray because I don't want to see a lot of distractions. I don't need a lot of colors in my face. Okay. So after that, I still continue to mark out the places where the charts turn back. But what we're actually focusing on is this part here. I just like to look at the far left because that is important. We're analyzing the past in order to predict the future. That's crazy, but that's what we're basically doing up in this Forex thing. So I do that. I just cloned that, but whatever. I continue to do that. I just marked that position. Why did I do that? Because the chart went up there, went down there, and continued to go up. Same right here. You see, it went up. It was there, right? So it was, okay, let's do it. It was here. It went down, stopped at this area, exactly where it has been stopping all over there. Okay, stopped at this area, did that, and then stop at the same area. So you can see it is obviously an important part of this chart. Okay, so I just add another zone. The more zones you add, the better, but on the other side, the more zones you add, the more confused you might get. So just put enough, just recent highs and recent lows. So this is the monthly time frame. So here you just can just add to the majors, okay? Because we're gonna go deeper, we're gonna go down on the time frame, so we can go down until the 4 and add more positions of support and resistance, because here it just shows like the majors, which is quite important. We have marked them down right now. I'll also mark down this area because see where it is right now. From here it might go down to this, and then from here down to this. Okay, so I'll also mark that down, but I don't need to, remember, because it's just here. It's not really that important, but I'll mark it down. At least have 4 zones right there, which is 1, 2, 3, 4, and I'm going to put this fourth one right there. Okay, so after I've done that, I'll go down to the daily just to see how the lines show up right there. Okay, so I still see it as important areas. You see, it's still just important areas, all of it. So at the daily, I'll add this area. At the daily, I'll add this area right there. If you do it in a line pattern, the more you do it in the line pattern, the more you'll get used to looking at just as candlesticks, and you know that there is actually a resistance zone. But in the beginning, you just want to use the line. I also sometimes use the line, especially when I not quite certain of the area. So here I just make it small, so I can know that it's not from a major time frame, it's just from this small time frame. The line charts that stretch out throughout the whole screen right there, I know it's like from the major, like from the weekly or the monthly, which is like super major. So I continue to go down in order to mark down these areas. So as I can see right there, there's no need for me to mark down any other area, um, any other area besides this area right there, because we can look at the chart actually turning back from here or from right here, but it has already done that, like turn back from right there. So we don't need to do that again. Don't need to do that again. We don't need to do that again. We can add one right here. I would add one right here, just at the recent places where it has turned back. So you often can also look to the left. You see here, it has rejected right there, turned back and done some reversals right there. So I would add an area right there. I would add an area right there. So after I added my area, because I trade trend lines, I would now begin to draw in my trend lines, and that will help guide me in the direction of the trend. So I'll draw a trend right there. My trend lines are often white. This is just because I had it green because I was explaining in another video, but this is often just white. Plain colors are good, no distractions, just focusing on the chart patterns. No? So we have it right there, like that. Okay. So as we have it right there, we remember we're at the 4 hours, okay? So as we have it right there, I'll just zoom in. But you should remember that you don't want to trade on a zoomed in chart. Okay. You want to zoom out. Then I'll go back and reverse until here. With reverse until here. Okay, we all can see that the market actually went down from there. But let's pretend we didn't see that, and let's analyze the chart and what led to the fall of Euro USD. Okay, so as we can see, it's on a downtrend, and we can see it is at a major resistance. This resistance line is quite thick. I'd often just narrow it, but we can just continue. I mean, it doesn't hurt nothing. No. So as we can see, it's right there. What I would do is I would further continue to add another trend line right here, just to see if it's going to go up or go down, because it's very important for us to look at it breaking the trend. And there's a small uptrend there, and also breaking the market structure, because right there it was having an uptrend, so it has to break the market structure, which means if this was a retest and then a high there, so we have to pass this retest in order for us to continue to consider the sale. It's not often important because we are on a downtrend, so we can scalp a sale basically. We can take such risk. It's not that risky to follow the trend unless you're going against the trend. So what I like to do is I like to look at the bigger chart just to see some chart patterns, like two candlestick chart patterns, three candlestick chart patterns. That's what I'm looking at. I'm not looking at head and shoulders. I'm not looking at double tops, double bottoms, all them stuff right there. No, I'm just looking at small candlesticks like the ones I just mentioned. So I'll just post it right there. So you guys saw a rejection right there. Once I see that rejection, just this blue one, I'll already consider a sale and start to dive in to see where I can start to sell. So it did it twice for the second time right there. So what I'll do then from there is I'll go to the lower time frame, like the 1 hour time frame. Then I go down to the 1 hour time frame. Okay, so I go down to the 1 hour time frame. Then I try to look at it breaking that small uptrend, yeah. So we are following the trend. So our plan here is to wait for it to go up, see it has formed a double top. You can take the sell right there, but for that you'll need for this market to do that. But often patience is key, so you can wait a little longer and you can take a smaller, a safer sale right there. Like we see touch there, which was our last low, and we can put here, and we can put a level right there to see that if the market crosses this area, this will be our area of interest, and we pay close attention, and we consider taking sales here after we see some rejections. Okay, so after that, you can see it rejecting right there on that blue candlestick, rejecting as it did right there. So from there, you can take the sale just to this next lower low. Where is it? Short after that blue candle. If you want to make this tighter, because the tighter your stop loss, the better, because then you don't need to risk a lot of money. And that's quite important this market, because the risk is more important than the reward, because you don't know, you might lose, and you don't want to lose a lot of money, because Forex is a game of probability. So make sure that the probability, the odds are stacked in your favor, that even if you lose, you're not really losing a large portion of your portfolio. So I just went to the five minute time frame just so I can tighten the stop loss. I might have to increase it, because that's what it seems like I'm gonna do right there. I don't really want to increase it like that, because that's like a lot. That's really a lot. I'll just have it right there. But no, you get it out. So what we're gonna do, I'm just gonna put it right here, because you can always re-enter. If you put it somewhere like this and you get wicked out, re-entering after you have lost so much money is useless. So you make it that tight, and then I'll just play to show you all what happens next. Let's pretend we didn't see what happens next, but we're gonna play it now to see what happens next. After I've explained us following the trend, after I've explained us waiting for the change of market structure, after I've explained us waiting to see the rejection and looking at the candlesticks, momentum, and stuff of that nature, we're gonna take a sale. Okay, we just got wicked out there, unfortunately. So seems like we're supposed to have it right up there. But as trader, you should always take partial profits. So the wise thing was to have like partial profits right here in this area, at least close half of your positions. But this is a downtrend, so you don't need to close half of your position, but at least a quarter of positions right there. So once you lose something like this, it's not that major. I mean, you might just break even. So yeah, it just wicked us out, and it continued to go down. So yeah, that was it. That was it. That was it. So we see it played out as expected. Unfortunately, that it did like a double testing of this resistance right there, with coming back to it. After you getting wicked out, if you're strong enough, you can re-enter again. Or if you are scared, you can leave it. But as we see, it did take the sale till this area right there, which was actually 4-to-1 risk to reward ratio after I increased. So yeah, thank you for watching my video. If there's anything else that you want me to do, like video wise, just comment down below. And don't forget,